So guys, in this particular video, I'm going to be teaching you guys the fastest way to calculate pips on gold, which is the XAUUSD pair. All right. Now I'm going to be showing you how to calculate it manually just by looking at these figures here. Okay. I'm going to show you how to calculate it from these figures. And I'm also going to show you how to calculate it with this measure tool that is here. All right. So this measure tool, you can calculate your pips with this measure tool. Okay, just by looking at these figures here. And also, I'm also going to show you how to calculate it with this tool also here. The short position tool is for selling, and the long position tool is for buying. So let's assume now that I pick that short position tool and put it here. This I'm targeting this area. I'm expecting the market to come back here. All right. For the market to touch here and start selling to the downside. Right. So I can be able to read the stop loss from these figures that are listed above here. I can be able to, get my take profit, my pips movement from these figures here. All right. And so I'm going to go over step by step. So this is a total package on how to calculate pips on gold, on XAUUSD. So this is the only video you need to watch to understand how to calculate pips on gold. Okay. And at the end of this video, I'm also going to give you guys the preferred lot size, how much money you are going to be losing. That's for each lot size that you're using, how much money you're going to be losing. Okay. So without any further ado, let's jump in. So guys, first of all, I want to show you guys how to calculate pips manually before using all those tools that I just mentioned above. Okay. So guys, let's assume that gold is going from 4,025, 4025, that's 4,025.103. All right, let's say the gold chart is going from this to 4,050. Okay, 4,050 pips. Now, I want you guys to avoid, just ignore the decimal number that comes after the whole number, which is 4,025. Just ignore these decimal numbers, this 103, the number that comes after the point, after the, this point here. So all you have to focus on is the whole number. So if gold buys from 4,025 and gold heads to 4,050, all right, then what you need to do to get the pips movement, gold is going from 4,025 to 4,050. All you need to do is to subtract the smaller number from the bigger number to get the pips movement. Okay, just like 4,050 minus 4,025. Now, what you're going to get is 25. All right. Then 25 is not the actual pips movement. You have to times it. Now, this is the formula I use to get that pips faster, to be able to calculate it faster. This is the formula that I developed. All you need to do is, once you have subtracted the smaller number from the higher number, you multiply your answer times 10, and it's going to give you 250 pips. So this means that gold has already moved 250 pips. All right. Now, if gold is selling, gold is going from gold sells from 4,050 to 4,080 to 4,080. All right, 4,080 pips. Then all you have to do is to subtract the smaller number from the bigger number. Okay, the same thing, obviously. So put the higher number up, smaller number up, down. Then once you do your subtraction, you're going to get 30. So this 30 pips, you times it by 10 times 10. That means that market has already moved 300 pips. All right. So guys, this is the fastest way I actually do this pips calculation. I'm also going to show you how to do it with the tool, with the measuring tool. Okay, so let's head over. Let me show you how to do it with the measuring tool. So coming over here, this is the setup that I'm actually watching. I'm watching this particular setup on gold right now. Okay, so I'm expecting gold to come back to this here. If I see a very proper confirmation, I want to sell from this area. from this supply zone to this low. Okay, so how will I know the pips movement that the market is going to move? What I usually do is that is either I pull up this ruler tool, that's this measure tool here. I can put it here from where I want to sell from to this low. Okay. Yeah, from this high, from where I want to sell to here. So if you pay close attention here, you're going to see this minus 106. Now I know I told you guys to always avoid the decimal numbers. That's that 0.512, right? Then this 106, it means that the market is going to be dropping 1,000 pips. This one minus 106 times 10. You guys remember the formula that I told you guys? You times this number here, any number that you see here, times it, multiply it by 10. And if I multiply this 106 by 10, it's going to give us 1,000 plus. It's going to give us 1,060 pips. So that means if the market drop from here to here, the market is going to move 1,060 pips. All right. Then if I pull up that short position too, because short position is for selling and long position is for buying. So if I pull up the short position too and I place it here, that's the place that I want the market to come to before I start selling. Now, if I place it there, from here now, you can also see where your stop loss is at. Now, let me adjust this. Okay. Then looking at this area now, you can see this up area here. You can see this up area here. You can see this 20. All right. You can see this 20.037. Now, I told you guys to just avoid the decimal number, the 037. Just focus on the 20. So this 20, multiply it by 10. If you multiply that 20 by 10, it's going to give you 200 pips. So that means your stop loss here is going to be 200 pips. So whatever number that the market gives you here, always multiply it by 10. So that means you're going to move, the stop loss is going to be 200 pips. All right. Then coming over to this area, to this TP, because this area is the target, you can see that we have 106. All right, so this 106 multiplied by 10, right? You're going to get 1,060 pips. All right. So guys, this is the using this tool makes it faster to calculate pips on gold. Then I want you guys to also pay attention to this area. All right. Now, looking at this area now, you can see risk to reward ratio. Now, risk to reward ratio, you can see 5.32. Now, 5.32 means that any amount that you risk on this trade, you're going to make times 5, times 5.3. Yeah, you're going to make times 5 of it. That means if you risk $50 on this trade, you're going to make 250. If you risk $10 on this trade, you're going to make $50. You're going to make $50 from the drop. So whatever whatever amount you risk on this trade you're going to make times five of it. Now, if I adjust this, you can see that it also adjusted. That means that it's showing 3.74. Now that 3.74 means that whatever amount that I risk here, I'm going to be making about 3 points. I'm going to be making 3 times the amount I risk. Let's say I risk $20 on this trade. I'm going to be making up to like 60 plus dollars from this trade. All right. So this is where to see the risk to reward ratio. You can see risk to reward ratio. Risk to reward ratio means the percentage, the amount of money you are expecting to make from the market. So anytime you see any number here, just know that whatever you are risking, you are going to make times whatever ratio that they give to you here. Okay. So that's how to know your risk to reward. Then a lot of people ask me, they'll be like, how do I calculate it in pips? Like, what preferred lot size should I use? Okay. Now, what preferred lot size should I use for my trading? Okay, because most of you don't really know the lot size calculation in when it comes to dollar, equivalent to dollar, like comparing the lot size to dollar. Okay. So guys, when it comes to equivalent to dollar, right? Then you are using if you are using if you are using 0.01 lot size, here are the lot size, and this is 1 pips movement, and this is 10 pips movement. Now, if you are using 0.01 lot size, okay, and the market move 1 pip, it means you are going to be making 10 cents. Yeah, you're going to be making what? You're going to be making 10 cents. That's 10 cents from the market. All right. But if the market eventually moves 10 pips, you're going to be making $1. Okay. That's if you are using 0.01. You're going to be making $1. That's if the market moves 10 pips. Now, let's assume now you use 0.01. Let's assume you use 0.01 on this trade here, right? And as you can see that we have 20, that the stop loss here is giving us 20. Then this 20 times 10, I told you guys to always multiply by 10, is 200. So if you use, if you multiply this 20 times 10, it's going to give you 200. Then that 200, if you use 0.01 lot size for that 200 pips, it means that you're going to be risking 20 pips. Okay, you're going to be risking 20 pips on that trade. Then let's go back. So if you use 0.02 and market moves 1 pip, you're going to be getting 0.20 cents. That's 0.20 cents. And if the market eventually moves 10 pips, you're going to be making $2. If you use 0.05 and the market moves 1 pip, you're going to be making 0.5 cents. Okay. Then if the market eventually moves to 10 pips, you're going to be making $5. That's if you use 0.05. Okay. Then if you use 0.10, if market moves 1 pip, this is supposed to be 1 pip, not 1 pips. So if market moves 1 pip, you're going to be making $1. All right. Then if the market moves 10 pips, you're going to be making $10. That's if you use 0.10, right? The same thing with 0.50. The more you increase the lots, the more money you are going to make, and the more money you're also likely to lose. All right, so 0.05, if market moves 1 pip, it's going to be $5. Market moves 10 pips, it's going to be $50. Then if you use one standard lot, that's one standard lot. If market moves 1 pip, you're going to be making $1. Market moves 10 pips, you're going to be making $100, and so on. So guys, but I want to give you guys a trick. I want to give you guys a trick. This is what I use, okay? So if anytime that you want to trade, anytime that you want to trade and you placed your long position to focus on this area, you can see that this area is giving us 20, all right? 20.037. Okay, so this 20.037, just focus on this 20. If we use the least lot size, which is 0.01, and the market goes against you, you're going to lose $20. All right. And if the market goes in your favor, you're going to make $106. That's if you use 0.01. Then if you use 0.02, If you use 0.02 and the market goes in your favor, you're going to make times 2 of this, times 2 of this 20 that is here. That is, you're going to be losing times 2 of this. That is $40. But if it goes in your way, you're going to make times 2 of this, which is $212. That's if you are using 0.02. So what I want you to do is that whatever lot size you are using, okay, if you are using 0.02, then come over to here. If you use 0.01, just know that you're going to be risking $20. If you use 0.02, that means you're going to be using that 2 to times this 20, which is 4. If you use 0.03, you're going to be 0.03, you're going to be multiplying this 20 here by 3, which is going to give you 60. If you use 0.04, you're going to be multiplying that 4 with this 20 here, which is going to give you 80. If you use 0.05, you're going to be multiplying that 5. That's 0.0. You're going to be multiplying this 20 by 5, which means you're going to be risking about $100. The same thing implies here. If the market goes in your favor, you're going to be making, if you use 0.05, you're going to be multiplying this value that you get here by 5, which is going to be 530 $530. Okay, so that is how I calculate pips on gold. All right, so if you actually want to join my mentorship class, all right, if you want to join my mentorship, my private one-on-one mentorship, click on the link on the description of this video or the comment section to chat me up. All right, okay. So guys, thank you for watching. Make sure you like, make sure you subscribe. See you guys in my next video. Thank you.